Welcome to this week's episode of Accredited Investor Markets Radio. Each week we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone. Welcome to Accredited Investor Markets Radio. I am Christopher Cahill. In a few, I'll be speaking with Ed Lehman. Ed Lehman is the founder of Lehman, Lee, and Xu. He is the longest tenured American attorney in China at 28 years. I met him 15 years ago working on a sale of a Chinese entity, and he was the man with whom we worked, and we've been friends since, and I'm very happy and honored to have him on this program. Last time, I spoke admiringly of Ambrose Bierce, an American storyteller, soldier, reporter, and satirical lexicographer. Bierce wrote The Devil's Dictionary, published under that name in 1911, published under an earlier name in 1904, and compiled from previous 12 years of newspaper items. Anyway, it's truly a dictionary. It's filled with terms that are defined. And here's three of them that are relevant to the remarks I will make in a few minutes. Self-esteem. Bierce defined the word self-esteem. That seems odd. 1911, to my ears, it's a word that didn't exist until the late 20th century when it loomed so large in educational theory and practice. But there it was in 1911. He defines it as self-esteem, that is, as an erroneous appraisement. Self-evident, another term he defines as an adjective, of course, appeared in the Declaration of Independence. We hold these truths to be self-evident. But I don't think he was thinking of that. At least, maybe he wasn't. It's a rather subversive thought. But anyway, he defined the term self-evident as evident to oneself and nobody else. Which reminds me, speaking of politics, of the late Senator Patrick Moynihan from New York, who was also a social science scholar, who would always say, you can have your own opinions, but you cannot have your own facts. Well, by Bierce's definition of self-evident, it's evident that some people can claim to have their own facts. The last of the definitions I wish to talk about today is education. Education. Speaking of education, Bierce defines as that which discloses to the wise and disguises from the foolish their lack of understanding. All right. All this by way of introducing the topic of confirmation bias. Confirmation bias is something we talked about on this show with guests and by myself. It's also something that we talked about at length several times across the 9-part Alternative Investor Basics series of 2015, which is a webinar series on Financial Poise webinars. You can purchase the recordings at this time. They're very good. And one of the things you can do wrong as an investor is indulge in confirmation bias. Well, what is it? Science Daily, and you can look at this on www.sciencedaily.com, defines confirmation bias as follows. In psychology and cognitive science, confirmation bias is a tendency to search for or interpret information in a way that confirms one's preoccupations. Also, to give disproportionately less consideration to alternative explanations. And I'd like you to consider something as you're urged to avoid confirmation bias. The most extreme form of confirmation bias, but it's still confirmation bias, is known as conspiracy theories. Conspiracy theory enthusiasts are notorious for cherry-picking facts or misconstruing them and so on to support what it is they are already preoccupied with believing. Now, this theory was taken up, but not by name, by Vitaly Katzen-Nelson, a former guest on this program, and I hope a future guest. In a thought piece he wrote for Institutional Investor in August of 2014, I reach back that far because it's so pertinent to the remarks I'm making today. The name of the article is Making Money by Agreeing to Disagree. Mr. Katzenelson, who is himself a registered investment advisor and has published several books on investing, I think they're very good books, says, beware buying a company that everybody loves. Think about it. We are shown companies that are loved and implicitly, perhaps, suggested that we ought to buy such companies. He says beware of that. Considering that love, in terms of what we're talking about, has already been priced into the stocks. The stocks of a company that everybody loves are likely to be fully valued or even overvalued with limited upside and much less limited downside. And part of this is worsened. This is love buying stocks that everybody loves because of who everybody is when we're looking for the opinions of other people. Investors tend to have confirmation bias. They look for people who share their views and find out what those people have to say. Mr. Katzenelson urges us, not in so many words, to do a modified George Costanza. No, do the opposite of looking for the opinions of people with whom you agree. And he tells the tale of a 2-hour ride. He did not intend to take this ride. He did not want this ride, but they got thrown together, he and a friend of his, a very intelligent friend of his, with whom Mr. Katzenelson disagreed diametrically on politics, stuck with each other for 2 hours. So rather than fight with one another, the two decided to ignore their pride and their respective views and spend the 2 hours identifying the specific ways in which they disagree, in identifying assumptions that one makes and the other makes, and articulating precisely, as they can, points of difference in political problems, which are also often have multi-dimensions, like financial issues that often have multiple dimensions. It's very different than the kinds of political arguments you're very likely to get into among people who care about politics, which often degrade into the two parties tossing off-the-shelf narratives at one another. If Katzenelson and his friend did that, I believe they would have retreated quickly into listening to or reading off their iPhones podcasts or articles given by pundits with whom each agreed. Which brings me back to Ambrose Bierce on education. Remember, he defined education as that which discloses to the wise and disguises from the foolish their lack of understanding. Well, bandying about prepackaged narratives is a way for disguising from yourself your own lack of understanding. There's no chance of understanding anything under those conditions. What Katzenelson and his friend did is rarely, if ever, done by financial pundits or political pundits. And again, the point is to urge you to take seriously, identify the best, most intelligent, well-spoken articulator of positions opposite your own, whether in finance or politics, but especially in finance, because it's your money at stake. Take seriously their best arguments. Contend with them. Identify specifics of disagreement. Identify assumptions you do not share. Identify precise points of differences. You might actually learn something in the process. And again, remember Ambrose Bierce, who defined self-esteem as an erroneous appraisement, who defined self-evident as evident to oneself and to nobody else. We can avoid those fates if we are willing to do the opposite. Let's get to the interview. Edward Lehman is the Managing Director of Lehman, Lee, and Xu in Beijing and Shanghai and 4 other locations in China, where the firm specializes in the legal aspects of doing business in China. Ed advises on, among other things, banking, intellectual property, finance, foreign direct investment, infrastructure, corporate and commercial law. Further, Ed Lehman as a qualified patent and trademark agent in Hong Kong, China, and Macau. He also co-founded Lehman, Lee, and Xu Mongolia, the second private law firm in the Republic of Mongolia. It's in Ulaanbaatar. Finally, but not at all, this doesn't cover the ground. We're just, the tip of the iceberg here. But finally, for now, Ed Lehman is also China legal commentator on China Central Television. Ed, thanks for being with us.
Hey, Chris, thanks for having me. It's a delight. It's great to be in contact after a long time, a little bit of time there.
Yeah, speaking of which, you and I met first thing I should say, and I omitted this from the biography, but maybe I should have included it. Ed is, like me, Ed is sired by the great city of Chicago, and we've run in lots of parallel tracks. He's good friends with the guy who shared my locker sophomore year in high school, for example. So
don't hold that against me.
I don't. I hope nobody holds anything against anybody. But 15 years ago, as a young lawyer, I was working on a case, a bankruptcy case. I'm a restructuring attorney, and we had to sell a Chinese subsidiary. Well, we looked to the most veteran American lawyer in China at that time, and still at this time, and that's Mr. Lehman. So you and I, Ed, worked on the sale of this Chinese subsidiary of a bankrupt U.S. parent, and tried to sell that subsidiary. It was in connection with that you told me of a concept called tight feet. The transaction went the way it went, and I guess my question is, would such a transaction, or maybe you could comment on how the differences between how such a transaction would go 15 years ago and today?
Yeah, sadly enough, even though Xi Jinping, the president of this country, has basically said that all the laws, policies, and regulations are in place, and we're a rule of law country, not a rule by law a country. And that would include things like bankruptcy. It hasn't really moved the dime or moved the meter very much with regards to the kind of activity that we had. First of all, I just want to say, having dealt with Chris, and maybe people have him as a lawyer, or they don't, or they're just listening to the podcast, but Chris was a young lawyer, but a brilliant lawyer at the time, and really was sort of educating me in the area at that point in time. When we were sort of jumping into this at the very beginning of dealing with issues like that. Before 2001, there was this emphasis on foreign direct investment. There was this emphasis on sourcing products from China that were inexpensively made. That has sort of shifted, and there's been sort of a maturation of the corporate entities, and people are here actually for geographical and geopolitical, or whatever the heck it might be, geopolitical, if you're Hughes Aviation or Booz Allen or whatever the heck it is. And what you see is a great deal of M&As, and you see bankruptcies that happen where the parent company is in trouble, but the company here is not. And there isn't a real systematic, that's what I think, Chris, we both concluded. There was not a real systematic way in dealing with bankruptcies at that point in time, nor was there really a very transparent market to be able to sell off these assets to. And it was a bit of a buffet, a bit of a messed up buffet at that point in time. And, like anything, I would liken it to sort of flying an aircraft while building it. That would be how that deal went. And I think, modestly, that wasn't your part. That would be our part, I guess. But I don't think much has changed, and I think we had a bit of a discussion beforehand that we're going to look to maybe set something up where I know you've got some databases and websites, but that there are a lot of entities over here that don't want to make it public, because we don't have the sort of reorganization like you have in the United States under those rules, and so people don't want to broadcast these things. But there's got to be a better way to build this, and I think it would be welcomed by the Chinese government, certainly, and by folks who are in the position that company was in when we were doing the deal.
That is some kind of marketplace which allowed distressed or assets that no longer are getting the funding they were getting before to be vended with some efficiency.
Yeah, exactly. I mean, there's been some movement with regards to different associations that have tried to get off the ground, and then there's been a lot of broad fanfare with regards to the groups that deal with the associations and that deal with people in the bankruptcy sector. But I think that's been a lot more smoke than it's been actual fire with regards to getting this down. And so I think that there's there's a lot of different opportunities for people here, but that's one that has not been fully explored nor exploited. Part of our problem, I would say, and this is no backslashing with regards to Xi Jinping's efforts, is we have an infrastructure problem, efforts with regards to the promotion of the rule of law. We have an infrastructure problem. I mean, America has, I think, about 1.3 million lawyers, and we've got 5 times at least less the population. And then China has about 200,000 lawyers, and I think about 70 to 80,000 of those got their law license in the last 5 years. So to a certain extent, we don't have the kind of speciality that has been, endemic with the legal profession in the United States, and that can be, cut both ways, meaning that there aren't these great professionals that are just specializing in these particular areas, and people are forced to actually be involved in a wide range of things because we just don't have enough folks to go around. And then there's obviously the language barrier. I mean, at this point in time, of those practitioners that can actually fluently do a deal in both languages, it's paltry. So there's a whole bunch of issues that they've got to tackle that are infrastructure-wise. So I don't think it's a sinister plot about not getting bankruptcy issues being transparent. I just think that we don't have the infrastructure in place. And I know we were speaking about this a bit before we started this discussion, which was for those of us who grew up in a certain era and a certain age and looking at this geopolitically with regards to China, I think we sort of have our thinking caps or our blinders on that this is some kind of major plot against the West. It really isn't. In this particular case, in my viewpoint, having been doing this for some time, it's a situation where we just don't have the proper infrastructure. For example, the judges in many instances don't have legal training, so that's an insane idea for us, or they've got very limited amounts. We did a survey at one point in time of some of the judges, and we had how many years of legal training do you have, and we finally had to change that to how many weeks, months, hours, before they became a judge. So
instead of the Shakespeare joke, let's shoot all the lawyers, what you're saying is let's cultivate more lawyers and then get up to an optimal level or thereabouts to fill out economic institutions and legal institutions appropriately for such a large population?
Yeah, no, I couldn't agree with you more. And I think that, the other thing is that the one thing I think we get right is the American legal education, which is essentially the Socratic method, and then it's really problem solving, whereas the law schools here, and I've taught a number of them over the years, it's just kind of talking at what the law is. So it's a civil law jurisdiction. We don't have stare decisis, so we don't have the rule of law that's created by the courts. Every single time we've got to go back, figure out what the heck went on or what the interpretations are, which are not case law, but it's actually the Supreme Court coming down with, this is how I would look to rule on this case, as opposed to a case law which would give you a fact. So I think everyone, and no matter how many times I repeat that, I think, people from a common law jurisdiction just simply don't get it. I mean, we are retrying cases at an appellate level where we're bringing in new evidence. So it's just a very difficult thing sometimes, I think, for people to get their arms around.
My recollection of law school, for the reader's benefit or listener's benefit, the distinction between civil law, which reigns throughout the parts of Europe that Napoleon was capable of dominating and has been exported to Japan and China and other places, is very different from common law. And that's an aspect of Chinese institutional life that I think is underappreciated by lawyers in the West and by business people in the West. Let's shift then to Mr. Xi Jinping. He said something very interesting, and I wanted to sort of have you reflect on your 28 years by listening to what Xi Jinping said, as quoted in the Wall Street Journal recently. He was speaking with Chinese economic and financial officials, the top people of the nation, and he upbraided them in the following manner. He said, "I didn't want to be on that cover, but thanks to you, I made the cover." The Chinese president was referring to the cover of The Economist, and that cover portrayed him with arms raised, trying in vain to hold up the plunging stock index. This was last summer. Would such a scenario have been thinkable 28 years ago, Ed, when you hit the ground in China?
I got to say that I would like to, espouse that I had a big enough imagination. I mean, I was educated. I actually first started studying Chinese at Loyola Academy in Wilmette with no concept that it was ever going to lead to anything except for who knows what, I guess, bad cocktail conversation. But, it was, I would like to say that I had the imagination. I knew the direction we were going to go in. But, 28 years ago, it's hard to imagine. But, Shanghai, when I moved there, was the only foreign community there was totaling 40 persons, approximately 40 people. And the only reason why I know that is because we had one social function a week. There was nothing to go to. There were no bars or discos or karaoke's or whatever. They were not open to the public. And it was a 2-hour function, and we would get together there. And I was the second foreign lawyer to be resident there. So this wasn't a huge group of people. And the Shanghai Stock Exchange, which I was a part of helping to open with, there was a fellow named Zhu Rongji who was in Wang Daohan, who were the, I guess, subsequent back-to-back mayors of Shanghai at the time. That's only was founded in 1990 when it was really the second stock exchange. I think Shenzhen popped in before they did, just a couple of weeks to try to be the first one. The Shenzhen is a city located just north of Hong Kong, and it's a sprawling megapolis, which has done terrifically well. But, the Chinese stock market was in a very modest, renovated 1900-style building, and that, if someone would have said to me that the Chinese stock market would become worth a combined $9.6 trillion, I don't think I would have had the imagination at that time. I was at the opening ceremony, for goodness sake. So, I mean, it was something, that was not only beyond my imagination, but I think a lot of other people. I mean, we were just hoping to, make a go of it. But in regards to with Xi Jinping being on the cover of The Economist, my guesstimate would have been that he would have wound up on there anyhow at one point in time. And I'm pretty sure that Deng Xiaoping, who was the paramount leader a few leaders ago, and then Jiang Zemin, have been on the cover. And being on the cover of The Economist is a privilege for many world leaders, and certainly China is an important economic country. So I do see that. I also see him as a very transforming figure. I mean, whether people understand it or not. I mean, Deng Xiaoping probably, was the most prolific and most impactful leader, where I don't know if many people would think that in the United States. They would say Mao Zedong, but I mean, that was moving kind of a different direction. For Deng Xiaoping to do what he did, and was sent, down a few times, and to be able to move in this direction, is seen by most people who are in China is pretty prolific. But I see that and pretty remarkable. But Xi Jinping is the same thing. But what I suspect, I guess you're referring to the reason for Xi Jinping being on the covers. In the West, we've experienced a lot of cycles of boom and bust. And, I think it's a natural thing for us to expect these kind of cycles on a regular basis. What goes up, certainly, as we all know in physics, must come down. So it's a natural law. And I think the boom and bust cycles are entirely foreseeable, with regards to what's going to happen here and what's happening here in the future. And, I do think that, everyone saying that China is an enemy is probably incorrect. And I do think everyone that says China is the panacea for everything is probably incorrect as well.
One of the reasons I wanted to ask that question was not just that he was on the cover, and not just that the market goes up and down. Those are reasons, but they're not my only ones. The other one was he was concerned about his image as an economic leader, saying, I didn't want to be on that cover. So there are international stakes to his economic leadership that could not have existed 28 years ago, I guess, even with the transformation Deng Xiaoping was doing. You were present at the creation, and the creation has certainly gone on.
almost going on against their will too, Chris. I mean, there's a whole bunch of reasons, I guess, for that. The Chinese diaspora, people looking at the state of the numbers of people here, and there are all kinds of wrong reasons why people came into China, and then they basically benefited from those reasons. And like I said, we oftentimes hone in on kind of specific issues, and we vilify or we glorify them. And I just think that anyone who's a China watcher or who's participating in the market, has to kind of discount some of these reactionary viewpoints. But the other thing I just want to say about Chinese politicians, which I don't know, everyone's reveling in the House of Cards, and I think that that's probably a very watched program over here at Ulaanbaatar, which is sort of the compound for government leaders. Well, it's one of those things where I think not being transparent in the election system is probably more treacherous and more devious. These folks are clever. Don't discount the political leaders and Xi Jinping and for their masterful use of Machiavellian style politics to be able to get where they got. To ours, we're in the election cycle there in the United States, and we kind of understand the ups and downs and publicity and backers and all that kind of stuff. Here, because it is not that transparent, it's much more difficult to get where you're going to get. The other thing that's interesting just is that there's 2,989 members of something called the Liang, which is the equivalent of our House of Representatives and the Senate, combined. So it's the largest parliament in the world, and most of those folks are not lawyers. I think with Li Keqiang, who is the prime minister, now he did have some legal training, but that's really, I think, the first one that I am aware of that's been, with the exception of one or two folks that have been in the parliament, but that is legally trained. Most of these guys are scientists, in hard science, not social sciences. So they kind of come at it from a different approach as well, and they're not really personality driven. The last big one, I guess, was Mao Zedong, of course, but there has been blips with Deng Xiaoping, but it hasn't been the personality of him. Now, Xi Jinping is being referred to as Xi Dada, which is kind of a sort of a colloquial name, sort of a good kind of father-style name, and so there is some cult of personality that's been adapted with regards to him. But he's a new leader. This is a new world, and it's a different kind than anyone else we've seen, I think, in my opinion.
Well, okay, but you did say, and why should anybody be surprised, if Machiavelli was speaking truth about politics, of course a successful politician will be to some degree Machiavellian. But the anti-corruption effort has gotten a lot of press here in its President Xi Jinping's anti-corruption effort. So let me ask a loaded question. How much of President Xi Jinping's anti-corruption effort is explained by the goal of raising commercial practice, improving the rule of law, and how much is explained by his desire to weaken well-placed political opposition?
Yeah, I guess my first comment is, I think you're trying to get my visa canceled here.
Yes,
right. But I'm happy to answer the question. I think, and I am, a foreign expert that's actually been certified by the State Administration for Foreign Expert Affairs, which is, I do speak on China Central Television, which is the actual mouthpiece, and the media is controlled all by the Communist Party, or the party we like to refer to it as. But, the pundits, and we talked about this on CCTV, is, I think it's a bit of both. I think, Bo Xilai, I don't know if anyone knows or heard of him, but that he's now been convicted of a whole host of different things. But he's been given life sentence, and his wife Gu Kailai, who was a lawyer, was actually convicted of murdering someone, a foreign national, and she's been given life sentences. He was as a matter of fact, and I was with Richard Daley, the younger, and we actually met with Bo Xilai when he was a Minister of Commerce, which is in charge of all foreign direct investment in China, in charge of the Chambers of Commerce and a whole bunch of other things. A very, very charismatic guy, and a really funny episode when Mayor Daley and I were talking with him. Bo Xilai was ridiculously charismatic. Mr. Daley, of course, is as well in his own Chicago way. But what Bo Xilai did, which I thought was funny, was he said, we have to thank Chicago for a couple of the holidays that are part of the fabric of the Chinese society. One of them is Labor Day. And so he went on to explain it was the Haymarket Square demonstration. We kind of refer to that as the Haymarket Square riot in Chicago, but that's May 1st, so that's that celebration of that. And the International Workers' Day comes from Chicago, and the other one was Women's Day, so that we have a half a day off here in China for a holiday which started with the women's suffrage movement in Chicago. So Daley, of course, sort of looked a bit quizzical, but when I went out to lunch with him afterwards, he said, well, every day is Women's Day in my household. I mean, I know his wife has since passed away, and regrettably so, because it was quite a good relationship. But Bo Xilai was very charismatic, and some say that was, pundits have said that that's eliminating some of the potential rivalries. But I think this has been by far the most, all of them during the time that I've been here, which is coming on, going into the 29th year, have initiated corruption campaigns, and most have been very short-lived. This has been the most profound anti-corruption campaign during the time that I've been here, and I think that it will not let up. And I think it's always a good thing for the system to question itself, and they are trying to apply rule of law in some cases, and like we do in our country. I mean, they suspend the rule of law because the party actually goes and does an investigation on them, and so it's not as transparent. That's the first step, as a party investigation, and then they conclude a bunch of things, and then it may go into the court system. But they've basically put behind bars the highest official, one of the highest officials in the military, been far-reaching into monopolies, into all other kinds of things, and I think that they call it, tigers and flies, I guess, as they're going after both the big guys and the smaller, insignificant guys, and I think it's kind of changed the dialogue with regard to what can and cannot be done in the country. I mean, that being said, there are deals like Qualcomm, which was facing anti-monopoly action. I think they let them off the hook. There was GSK, which was just happened over the time that Xi Jinping has been in power, and I believe they let them off the hook. So, those are very big, long, complicated cases, but I see that it hasn't been as bad for foreign direct investment as it could be. But I do see that's going to be an ongoing thing, and I think it's a good thing. I think it's a good thing because the issue is, can the party continue to rule? And the party is going to have to relieve some of its so-called perceived power into the legal system if they're going to be able to stay around. They can't take the blame for everything, and so it's going to have to be given to individuals or to corporations or whatever the heck it's going to be besides the party for issues or mistakes or problems that have occurred. So, I do think that this is bringing a discussion which we didn't have as much to the table, and I think it's a positive thing for everybody.
Interesting. Continue on the direct investment, because after all, that is our audience, is people who might be thinking about investing in China or investing in entities that invest in China, and the rule of law is obviously part of that. The recent journal article stated that foreign movie DVD sales in China are non-existent because of widespread piracy, and I thought, well, I was assuming that the stereotype of the Chinese economy not respecting IP was overstated. So how would you describe IP protection in China, past and present, from the perspective of a foreign investor whose investment might involve some IP?
Yeah, again, this is a largely misunderstood area. I think that people think they understand it, and as a result, they kind of write it off in one direction or the other way. Having seen the whole arc of the situation, I'm going to describe it a little bit like this. I do remember when Jack Valenti was the head of the Motion Picture Association, and they called it that, MPA or MPAA, I believe they call it at one point in time. And there was, being somebody on the ground in China and being a part of the chamber and being a part of the community here, there was a definite division between the in the early days, first of all, being a part as an American here in 1987, and then going forward from the 80s into the 90s, the first of all, the one thing I want to get across is that we don't exist. I'm talking about foreign business in American businesses in China because of our country. I mean, contrary to what the Department of Commerce is trying to sell, contrary to what whoever wants to sell as an idea, we're sort of existing despite them. So, I mean, when I first got here, it was really about geopolitical alignment in the United States and all these other kind of things. But the Department of Commerce and initiatives were all sort of fuzzy and vague. There were, American Motors Corporation came in, there was a book written about it called Beijing Jeep. It was a fiasco, and the rules, policies, and regulations weren't in place. But I just want to say, in looking back on it, and I've had to look back on it based on a number of things I'm doing right now, but there was a definite division during the 80s and the 90s with renewing most favored nation status and the issues with intellectual property. So you had people here that were sourcing products. You had people here who were trying to get access to opening up car markets or whatever the heck it was, which were directly against the intellectual property folks like Jack Valenti in the motion picture industry, and they were holding out to try to get better things. And you got to understand that even in our own community, it was almost coming down to fist fights in these sort of meetings that I was attending. So it was sort of amusing. So you had sort of Luddites that were here, I say that with all the love and affection I can say, that had represented sort of one camp of the United States thought process, and then you had people who were not in the market, which was part of the problem with intellectual properties. Intellectual property essentially started in about 1985, I guess, in the earliest, and then, certainly by 87, it was just sort of getting its feet. And, China's copyright law was established in 1990. It was amended again in October 2001, and the implementing stuff has come in 2002. So, I mean, like you were talking about civil law, we write these laws and nobody knows how to implement them. And so there was a whole bunch of things. The folks at the Computer Software Association and industry were also kind of going in their own direction. But the truth is the laws, policies, and regulations that are written for copyrights, for patents, for trademarks, I mean, they're excellent. I mean, the issue comes in implementation of those rules. And it also comes into whether people are playing, John Nash's, the Nash equilibrium theory. So by that I'm talking about the subject of A Beautiful Mind, which is this fellow John Nash, who went to school at Princeton and eventually got this Nobel Peace Prize, which is essentially, do they have both feet in the game? Is everybody participating in the right way? And I'm saying that, I've seen the enemy with regards to intellectual property, and the enemy oftentimes is the intellectual property councils themselves or the CEOs of companies themselves. They say, there isn't any protection of intellectual property in China. Therefore, I'm not going to file my intellectual property in China, and therefore there is no protection. When you don't, I mean, the thing that people don't understand about intellectual property, I think just when you're reading about it in a novel or hearing a discussion, is that all, like Tip O'Neill said, all politics are local, all intellectual property is local. If you don't actually pay and actually file and get granted rights within a particular country, you've actually dedicated those to the public. And so oftentimes the pundits, the Congress, or whoever the heck it is going to come back and say there's no rights here. Well, they didn't play the game. They weren't part of the Nash equilibrium theory. They didn't participate, and as a result, they're complaining after it's over. So, I mean, I see that part of the problem was budgets were saying, with intellectual property lawyers over the arc of the time that I've been here, there is no protection, so they didn't file for patent protection or some kind of protection, and then as a result, they didn't have any, and then they complained in the court system, and they said, well, the court system's bent, it's broken. But you can't win if you don't have the right equipment, and that's what happened. But with regards to DVD sales, I mean, young people today, I mean, almost everything is free in some way.
Oh yeah, I think that's largely irrelevant with the streaming and everything. But it was just it was a reminder to me that of the impression of Chinese handling of IP that we've had over time.
Oh yeah, no, and I think it's valid, but the issue is that whether you want to pay and whether you want to participate in it and whether you want to get involved, and that becomes a business decision at the end of the day. I mean, for example, I mean, for those of us from Chicago, is that Michael Jordan, New Balance, those two cases. So in both cases, Michael Jordan, and just to get your arms around it, I mean, Michael Jordan, well, I guess it's Nike, but Nike, on behalf of Michael Jordan, owns the English language mark for Michael Jordan, his name, but they did not file, and this is a mistake I think people make. And again, we sort of rule the world as a number one economy, and it's just all around good guys, I guess, to the Americans, and we like to use English. But I mean, in China, we actually use Chinese language. I know it's hard for people to imagine. And what these brainiacs at Nike didn't do was file a Chinese name for Michael Jordan, so that the colloquial name for Michael Jordan existed, before Nike went ahead and filed it in Chinese. They had to call him something. And being from Chicago, one of the things that certainly when I moved here in the 80s, it wasn't Al Capone, it was Michael Jordan, and so his name was really well known. We have a first to file system here. The name in Chinese did not exist outside of China, essentially, and some enterprise went ahead and filed the name Michael Jordan in Chinese. The folks at Nike did not, and they've been fighting over something that didn't exist and they didn't protect. I mean, so the cases are, they sound like, oh my gosh, Michael Jordan doesn't own his name. Well, yeah, he doesn't own his name in Chinese because somebody who was paid to do that didn't do their job, and now they're trying to make up for those mistakes. So, I mean, it seems like really unfair, but the fact is that everyone knows it's a first to file system, and so everyone should know that you have to have a Chinese language mark because we are in China, and when you don't do that, then you give that up, and that's why they've lost those cases. So again, when you read this, Chris, in the press, everyone's like, oh my gosh, China's just so darn unfair. But it's if someone will sit down and actually think about it, for example, I mean, Coca-Cola has a terrific name. They actually, it's Coca-Cola obviously in English, and it's Coca-Cola in Chinese, and so it's both translation and transliteration, which so it sounds like Coca-Cola, but the actual meaning of that is like it's good for your mouth and it tastes great when you break down the actual Chinese characters.
That's clever.
So it's actually translation and transliteration. So, there's a whole bunch of very unique ways to do things. So, like I said, I mean, most people don't spend the time, energy, and effort to really understand. They just say, that's unfair. Michael Jordan doesn't own his name. But the story is a little bit more complicated than that, and I just think somebody dropped the ball. And that's not the first case. I mean, there's many. New Balance is another one. What was it? Ferrero Rocher is another very famous one. I remember because I had met those folks when they came in, and I said, if I were you, I would file the Chinese mark, and they're like, we are Italian, by the way. We're from Milan. I don't think you fully grasp, that we are, they're just going to learn to say Ferrero Rocher, which I can barely say because I'm from Chicago, and some enterprising, chocolatier decided to file their colloquial mark, and they didn't own it, and they spent, millions, hundreds of thousands, millions of dollars trying to fight that, and it was just a losing battle. So
maybe if I can try to summarize, try to learn the rules of the game and be prepared that your investment model has to take into account some costs you might have not had anticipated, and you should listen to people on the ground who've been there.
Yeah, exactly, Chris. But the irony is that those of us who are here, and again, our American brethren, I mean, they have a hard time listening to guys who are on the ground. I mean, the guys who are on the ground have been usually toast. I mean, the guy called Joseph Stilwell was here during, it was a Chinese speaker from the West Point Military Academy and was a general. Was given advice, who we should support, how we should, carry on here in China. He was dismissed. A guy called John Stuart Service, born in China, an American guy, went to Oberlin College. When he came back, was a diplomat, said who we should support. He suggested Mao Zedong. was promptly fired and went through the McCarthy hearings. And the fate of those that are on the ground here from our country hasn't been a good and positive one when we're trying to tell the truth. I think a lot of people want to hear what they want to hear, and we're looking at it with our own eyes. And the problem is with these companies is that they come in all different ways. It's a bit like the first line of Anna Karenina, all happy families are the same and all unhappy families are unhappy in different ways. With regards to companies here, it's the same thing. I mean, the CEO comes in or maybe one of the buyers comes in and starts sourcing product here, but they never talk to the intellectual property department, and they're not selling in China, but they don't know that half the inventory is going out the back door and actually being sold in China. So, I mean, all their best laid plans just get toasted out, and then people like us are left to pick up the baggage, and we have to give the bad news to people, and they're like, ugh, I don't think we want to pay for that legal bill. But it's something that they created. So this is sort of my reality, but it's hard to articulate it, I guess, to the outside world.
Well, let's finish up then with a technical question, not a quasi-political or let's update the view of China that we've been holding, and let's switch it around. And the reason I want to do this is because we've had on this program twice Scott Ficken of South Africa, who's big on cross-border real estate investment, especially in places like the U.S., Canada, and Britain. Well, the U.S., Canada, and Britain and Australia have also been places where Chinese real estate investment, especially in New York and Miami and so on, has been noted. So my technical question for you is, how would you summarize Chinese government controls on the ability of Chinese wealth holders, citizens, to invest outside of China? Well, what's the nature of the controls now, and do you expect them to be eased over time, which of course would facilitate such investment?
Yeah, the floodgates have opened up essentially. I mean, so it's only moving in a positive direction. That may or may not come back to bite China in the future. But, I mean, you see some of these large deals, which are very interesting deals. For example, buying the Waldorf Astoria, buying some of these landmark sites, which, we saw in the boom of the 80s and the Japanese buying Rockefeller Center and all these other kind of things. I don't recall the statistics off the top of my head, but there's a shockingly large number of Chinese who are buying into America, and they are crazy about it. And this is again another hangover from in 1949 they established New China, and that was Mao Zedong and the government and the system we have now. I mean, up until that point in time, the issue was about peasants not owning land. So this is something I think that's kind of hardwired into the DNA of Chinese, that to own land, to own property, to own something is good, and whether that's good, bad, or indifferent. But what I have seen, I mean, and I know, high net worth individuals in the top, guys in the top 10, guys in the top 20, 50, whatever. I mean, I know people in this burgeoning, well, I'm going to call them middle class, but we call them insanely wealthy, 300 million group, or that's the number they're throwing around, which is about the size of our country. And these folks can all, in my mind, essentially qualify for foreign direct investment visas in the United States. I mean, they have enough money to do that. They're paying for their kids to go to university at $50,000 a year, or whatever the heck it is these days. So, yeah, that's an insatiable thirst. I myself have seen it in other markets in Vancouver, where a regular Vancouverite, whoever that might be, not an overseas Chinese, is going to buy a pretty ramshackle house for $1 million. So, I mean, and I see certainly in places like Silicon Valley, and we've been handling some of these things. I mean, they're buying sight unseen. They're doing it all in cash, and there's a low escrow period, or there's whatever it is. There's no inspections in some of these instances because they're just tearing the places down. I'm not talking about the 300 million folks. And so that is pretty much insatiable. And I think that trend will continue. I think that I often joke with the rich guys that I know. I say, well, you got two options. You're going to get more wealthy, or you're going to go to jail. So just, try to figure out where we're going to look with that. So, I mean, I say it half jokingly that there has to be an exit strategy, with regards to what they're going to be doing with their lives and their their fortune. But I think that trend will definitely continue. I think it's going to be difficult for some people because these sort of neighborhoods are going to be purchased. I was joking when Mr. Obama, I don't know if the viewers or listeners understand this, but he passed a law, and we have a bilateral agreement that tourist visas from China are allowed to be up to 10 years. The business visitor visas are allowed to be up to 10 years. And I was just flabbergasted when that happened. That I don't think we have the mechanism to necessarily get folks out. You have to leave the country, I think, after 6 months or some period of time when you're there, but it's valid for 10 years. So I was half joking with my brother who lives in Cincinnati. I said, "You're going to have more Chinese neighbors than I do." So it's to invest, and they're there to come, and they're a good group of people to come into the country. There's no question about that. And they acquire wealth, they save. So they're pretty good citizens, and but better than most. But I do see that is something that is not going to abate anytime soon. I think that any money that they have, they're going to throw at education. Any money that they have, they're going to throw it into real estate. That's for darn sure. And that they understand. And a lot of times, unfortunately, and we see this in this country, is they get the real estate and then they don't rent it out. So then that becomes a bit of a problem for the neighborhood or for whatever. But I think a lot of these big markets. Well, the other thing, Chris, is that some of these marquee real estate purchases, I'm not sure they were motivated by actually making money. I know that sounds silly, but we don't have a fully convertible currency, so I don't think many people are aware of that full on. And so to be able to get money out of the country, you have to have a reason to do that, and it has to pass the State Administration for Foreign Exchange and to permit money to leave the country. So there is this control there. So I think that legally speaking, it's there, but from a nuts and bolts, how do we get the money out of China issue, that still undergoes a level of scrutiny that we don't necessarily have in the United States. So that will kind of be a lingering issue. But I think that anyone who's clever enough, certainly has enough advice to be able to do that. And so I don't see it. It's a vague deterrent, but not one that's daunting.
Yeah, we've sprawled around quite a bit, and been extremely enjoyable. Thank you very much, Ed Lehman, for joining with us today.
Thanks so much, Chris. I hope to be able to do this again sometime, and I know we probably didn't blather down here, but I know we didn't cover a lot of ground, but I hope to do some more with you, and hope that the listeners find an interest in China or continue their interest in China.
Well, they can hardly consult a more informed source than yourself. This has been Accredited Investor Markets Radio. Accredited Investor Markets Radio is produced by Stephanie Straight. We thank you all for listening. Let's do this again sometime soon.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.